So hi everyone, this is our Shoot the Moon Stock Picks video conference. And today's date is February 11th, 2021. We've had many stocks that have been either identified in our retreats or stuff that I have posted blogs on that have shot the moon over the last couple of years. So we had an artificial intelligence company, we had a couple of cannabis companies, we had an electric vehicle maker in China, and we're going to talk about how these companies are very different than what we're seeing with Gamestop. We're also going to talk about Reddit and Robinhood, because these are definitely new factors that are starting to roil the markets. So they do add a different dynamic to how long you should hold things and all sorts of things that are going on. So let's get into it. I'm going to stop this for now while I pull up all my charts, but I'll be right back and we'll be talking about this in greater detail. Thanks for joining me. Hi, everyone. How are you? And again, welcome and thank you for joining me. So we've had, this has been a very active month. All of a sudden, we had a few stocks that just blew up. Of course, we've had other ones along the way that have just blown up like crazy. So let's go through a few of them. And then I want to specifically talk about how this is the stocks that we've been picking at the retreats or I've been featuring in my blogs, how these are very different from the stocks that you're seeing and hearing in the news, like the Reddit stocks, the Robinhood stocks, GameStop, AMC theaters, that sort of thing. But first, let's go through our hits, and then we'll compare it to GameStop, AMC, and others. I'm going to share the screen. So you can get additional information on this topic on my blog. You just go to Natalie Pace /blog. And if you scroll down, it's the first one, Shoot the Moon Investing. So over the past year, we've had Veritone. We found it at $2 in February of 2020. In a stock masterclass, I featured this one, and its current value is 50. NEO was found at $1 in October of 2019 by a teenager who was there at a retreat with his mother. The current value, the last time I checked, which was yesterday, was $63. Zoom at 90 in March of 2020 when the markets tanked and everybody was on Zoom. And all of a sudden, people are saying, instead of video conference you, they're saying, I'll Zoom you. That's a big indicator that a fundamental shift has happened. And by the way, Zoom had to beat out Skype, owned by Microsoft, Google Chat, owned by Google, Facebook Live, owned by Facebook. It was funny because when I first mentioned Zoom in one of our retreats, you know, one of the people said, well, you know, no, I think it was November of 2020. No, not 2020, of 2019. And somebody at the retreat said, well, we don't know where this company came from. It has a Chinese CEO. And I said, we do know where this company's come from. It didn't come out of nowhere. And he thought it was just like a brand new company. I actually had a Zoom video camera, I think in 2006. It came out of Cypress Semiconductors. And it may be that the Chinese CEO is Chinese, or it may be that he's Chinese American, but this is an American company and it's been around for a long time. And it was always the best product. So, and now is clearly still the best product. So, you know, when you have a company that is going to enter a space and they do things so much better than everybody else, that company can be worth 10 times more overnight. And that's what we've seen with Zoom. So back to the checklist real quickly. I'll give you a lot more color on all of these. Aphria, we found in $1.95. We've had this, bought this at various stages. Probably the highest that we purchased it at was $4. When I wrote this yesterday, the value was $27. Or actually, when I wrote this on the 29th, the value was $27. It went higher than that. So yesterday, this is full disclosure. So just FYI, I wrote and posted this blog and sent out blasts to you guys and posted it on Twitter yesterday. And after that was done, then I went and I looked at my positions, my personal positions, and I thought that these prices were very lofty, especially for the cannabis. We'll talk a little bit more about that because today they had a pullback, and that has everything to do with Reddit and Robinhood. And we're going to discuss how that's a new phenomenon that is roiling the market. So you have to be very aware of this when you're considering whether or not you're buying and selling. There's another way that you can also, using the pie chart system and having hot slices, like a hot slice of cannabis, or you could have Neo as your clean energy hot slice. You could have Veritone as your technology hot slice. It's an artificial intelligence company. And if all of a sudden your one slice has gone to 10 slices, it's telling you to sell high. And the really good thing about that is that if you sell high and you trim it back to a slice, if it keeps shooting the moon, you still have the opportunity to keep making gains. However, if it slides back down and you still believe in the company, you can buy more low again. So the pie chart system is a buy low, sell high plan on autopilot. We'll talk about that again more at the end of the video conference, but it's very helpful for these hots, especially in this new environment where short-term trading on the bulletin boards, which reminds me a lot of what happened in 1999 when the dot-com stocks heyday. So we'll talk a little bit more about all of this, but let's go back. And again, in this blog, we talk about why this is different than GameStop. And also I'm going to talk a little bit about AMC. So this is Mitchell. He sent us in this so that we could feature him because, hey, kudos, we got to give credit where credit is due. But the system works. He was using our stock report card, asking the 4 questions, using the 3 ingredient recipe for cooking up profits. And he very shyly said, hey, look at this one. What do you think? And I said, that one looks like a winner, but we got to make sure that you apply the 4 questions to it. So this is a comparison of sales: GameStop, Veritone, Neo, Zoom, and Aphria. And as you can see, GameStop is not a rock star stock. It is a retailer that's losing revenue. And the only game that it had was that Wall Street Bets, which is a Reddit bulletin board run by a number of moderators, not just one, decided that they wanted to promote it and to squeeze out and do a short squeeze on hedge funds. So it had nothing to do with the viability of this company. This company is in trouble. It may have been able to borrow money like a lot of us have been able to borrow money, not everybody. And, socially, that's really hard to watch people struggling so much, but the corporations have been able to borrow money. GameStop may be able to borrow money to get through this, but the truth is they are losing revenue. And they're losing revenue at a time when gaming is going absolutely crazy. So it's more to do with the retailer and that people are buying their gaming from other venues, not GameStop. If you've been in a GameStop store, you'll see that it is very, yes, given the pandemic, who's going there? But, people are going to other places where they need things. And clearly, many people think that gaming is a basic need in a pandemic. So they're still doing it, but they're not necessarily going to GameStop to get it. So again, this was a play, a populist play, not an investment in a great company that is selling more products today than it was selling yesterday. Neo is a Tesla competitor based out of China. And I'm going to show you some of these stocks so that you can see what they've done. So here's GameStop, and here's what happened to it, let's say over the past year. So it was not worth much. It got promoted and it went crazy, and now it's back down in the gutter. So it went from $3 to $483, and now it's back to 51. I have so many people, mostly people that are millennial or Gen Z age, who were calling and dying to try to buy GameStop at like 350 a share. And I was like, you know, you're chasing something here, and it's not a good company to begin with. So be very, very careful, because this actually looks like a pump and dump scheme to me. When you have somebody that is promoting something so hard and you get people to buy in and you tell them a story they believe in, someone is making a lot of money on that. Someone sold and made a boatload of money while others were buying high. So when you see something like this, and you usually see this kind of activity on penny pot stocks or any kind of off the boards, that sort of thing is usually where you'll see this kind of thing. Now they're trying to say that the short sellers and the hedge funds did it, but the only way that you make money on GameStop, if you buy, let's say you bought it at 51 and it goes to 483, the only way you make that money is if you sell it. You can't hold on to it because the company's in trouble, and it eventually is going to have to land where the company is more a better value. We're going to talk about that more with Aphria and Tilray too. Excuse me. Okay, sorry about that. I swallowed down the wrong way. All right, so I'm going to go back to that blog because there were other lessons to learn there, and I want to make sure that you really get it, okay? Hang on, let me share again. So I talk about the difference between GameStop, Veritone Neo, Zoom, and Aphria. I also talked to you a little bit about some of the reasons why we liked these companies, and I do encourage you to read that. And then I talked to you a little bit about how you can find your own shoot the moon stocks. My goal here really is to teach you how to fish. I stopped my stock newsletter a while ago, and the reason is because of the volatility. It's not easy to make gains when the markets can go crazy back and forth like GameStop did and like the cannabis is doing. So I want to teach you how to do this. When the wind is at your back and we're at the bottom of the market and there's nowhere to go but up, then I might start the newsletter again. But for now, we need to treat it more in the pie chart system with hot slices. You need to really start learning what you're doing and that sort of thing. So now's the time to educate yourself, to learn the ABCs of money that we all should have received in high school, and play around a little bit with play money or with hot slices. So again, I am hosting a stock masterclass March 6th, options for beginners March 7th. You can use a small amount of money to leverage it. Do not believe those ads that tell you it's an easy, safe way to earn extra income. Options are not easy or safe. They're not guaranteed to earn you extra income. They're actually very high risk, but you can use a very small amount of money, but they're still very high risk. And you have to know how to pick either the biggest loser or the biggest winner in order to be successful with options, because volatility is the game with options. So that's why you can't attend even my options for beginners class until you've been to 2 retreats and a stock master class. Don't believe it when other people tell you they're easy. They're not. The Nobel Prize winning economist who won the Nobel Prize for writing options, an options formula, the Black-Scholes theory, Myron Scholes, he had one of the biggest bailouts of his hedge fund. It was, I believe, in 1989. So if he has had, the guy who wrote the book on options has trouble with it, why do you think that it's going to be so easy? Okay. So here's some other tips on what we talk about. So we do use the 3-ingredient recipe for cooking up profits. We use stock report cards. We ask the 4 questions. You learn these in the retreat. You then take it deeper in the stock masterclass because you start looking at the forward outlooks and the earnings calls. And, you know, with that information, it's literally like looking at a crystal ball, but it's a crystal ball of data. It's not a crystal ball guessing what another writer is telling you should invest in. It's you looking at the data. And that's very, very revealing, because whenever an earnings report happens, it's always telling you the story of what already happened. What if you could learn the story of what the company thinks is going to happen? Or you can look at some orders or some other ways that you can see what's going to happen before that earnings report. That's where the crystal ball comes in. And that's where the shoot the moon stocks come in. So then after all that analysis, you have to ask yourself, what can the company do? What can the industry do? What will the market do? So, and there's a saying in Wall Street, it's a rising tide lifts all ships. So whenever the markets are doing great, stocks can all increase in value, even ones like GameStop that are not actually that great of a viable company. When stocks tank, or when Wall Street goes down, like it did, the high was February 19th of 2020. The low was March 23rd. It was the fastest that the markets had ever gone from a bull market to a bear market in history. They dropped 35%, and they took almost everything down with it. So I always say, I add to that Wall Street aphorism, rising tide lifts all ships, that a sinking tide can ground them. So you better know where we are in the business cycle. You better know, you know, if stocks are a good price or if they're overpriced. And those have to be factored in when you're considering buying and selling. All right. So let's go in a little bit deeper on the difference between these shoot the moon stocks that we found and GameStop. So again, here's GameStop, looks a lot like a pump and dump scheme. Very, very difficult to make money on this one. Here is Zoom, and here it is on the year. Not difficult at all to make money, provided you bought it at a good price. If you bought it at 500 a share, then you know you're down. But it doesn't ever hurt to have a stock shopping list, right? So if the markets go down because we get bad economic news, or if the US credit gets downgraded or anything of this nature, then if you know which companies you think are going to be the rockets out of that, when the stock prices tank, those could be the ones that you're buying low. And again, the pie chart system is going to help you with this. We'll talk about it towards the end. So here is NEO. And again, this is NEO compared to Tesla. NEO is the blue line, Tesla is the purple line. So again, and when you look at the sales growth of NEO compared to Tesla, it's outstanding too. So NEO's sales growth is really outstanding, 146%. I believe Tesla's might have been in the 40% range. So it's really outstanding. Here's Veritone, and this is another one that, you know, it's been very easy to make money on this, especially if you called it early. Now, on the other side of the equation, if Veritone tanks because they don't have a great quarter or anything like that happens, then, you know, the first thing you do is that even if I have a stock shopping list, I don't just go right in and buy it. I still am going to refresh my stock report card. I am going to use all of the tools that I can to see if it's still as hot today as it was before. Okay. And again, you can't do that until you learn those tools. And one other thing I want to tell you is if you're trying to trade stocks and beat hedge funds, that's like thinking that you can go on the tennis court and beat Serena Williams. If you don't really know what you're doing, you're going to get creamed, you know? So I don't think that everybody is cut out for, and it's not day trading, right? It is You do have to babysit individual companies. But if you want to invest in individual companies, then you owe it to yourself to learn a system that works against the hedge funds. It's not difficult, but it's going to be different than reading the Wall Street Journal or listening to a hot tip from a friend or watching a bulletin board and deciding that you're going to short squeeze the hedge funds, which clearly didn't work so well for the GameStop. And I don't believe it has for AMC either, but we'll look at that in a moment. If you do not want to have this level of education and babysitting a stock, then all you have to do is purchase funds. That's why people do funds instead of stocks, although there are tricks to purchasing funds these days because there's so much debt in the world. A lot of our banks and fund companies are actually at the lowest rung of investment grade, just above junk bond status. So if that's a statement that concerns you, you better get yourself to the February retreat, okay? All right, let's dive in deeper to these shoot the moon stocks. Okay, so there's Veritone. Here's Aphria. So again, if you purchased Aphria anytime before even like what, when did this craziness start? Okay. So since December, it's had a little bit of a run up. And the reason for that is that on December 4th of 2020, the House decriminalized cannabis. I wrote a blog on it. That is positive for cannabis, especially because everybody started saying, well, the Senate now is going to fast track it, and maybe the US is going to be like Canada, where we completely decriminalize it. And that is something that very well could happen. But I think it's also important to realize that the last time that cannabis got super duper hot was right before Canada decriminalized. And the run up was before Canada decriminalized. And then once they actually did it, that's when the stock started pulling back. So let me show you what that looks like, particularly with Tilray. So here's Tilray's max. And you can see, so I believe it was October of 2018 when Canada decriminalized cannabis. And you can see here that September of 2018 was actually Tilray's high. It went up to $300 a share because it was involved in another one of these bulletin board short squeezes. And in fact, in my blog, you can link over to listen to Kennedy talk about that, because he was, giving advice to the GameStop CEO on CNBC. So this happened, and then the decriminalization in Canada, and by October or November, December, it had dropped from 300 a share down to 71, and then it continued to drop. Now you might ask yourself, well, why in the world did that happen? It's about valuation. So you have to know how to value. What's a good value? It's easy to say that you wouldn't pay $50 for a cafe latte or for an avocado, but people have trouble understanding what the intrinsic value of a share price is. So that's another thing that you got to learn, right? So yesterday, after I posted my blog, when I was looking at the valuation of Tilray and Aphria, they're merging, and they merged in December. Their deal was based on a $5 billion valuation for the companies combined. The combined value of the companies yesterday was $15 billion. So there are many reasons why I thought that was overvalued. And that's why I took most of my gains off the table yesterday. I still had a little bit of game on just in case it kept shooting the moon. But with 1,000% gains, you can say I sold high. Now, nobody ever buys at the exact bottom and sells at the exact high every single time. I took my profits on Veritone probably when it was at 15 or 12, and it went on to above 40. So that hurts, but it still was an amazing gain. So what you have to do is treat this like a baseball player would. If a baseball player goes up to the plate and they had a strikeout the last time and they tell themselves, I struck out the last time, that's not the way that they get the home run, because they know that 2 out of 3 times they go to the plate, they might strike out. But if they get the home run, or if they get an RBI, or if they get bases loaded home run, then it makes it all worth it. So you always have to be using your non-successes as learning, and using your successes patting yourself on the back. So my non-success with Veritone was to say, well, how is it that we can be in the worst economic environment, and yet a company like Veritone, which is good but not fantastic. If you look at this, at their gains, you're going to see that their gains were pretty decent, but they weren't anything like Neo. So 23%. Look at the other ones here. Even Aphria isn't as fabulous as the sales growth gains of Zoom and Neo. So how does that happen? And that's when I started paying a lot more attention to Robinhood investors. You can't count them out. It's Robinhood and Reddit are roiling the markets, just like I did when I was their age back in the .com run up. But I learned how to be on the right side of the trade, which is how I got in this business. You can read my story in Put Your Money Where Your Heart Is. And by the way, Put Your Money Where Your Heart Is, just go to nataliepace.com, scroll down and click there. The best one is going to be an audio version for you, okay? And it does include the stock report card, the 4 questions for picking a leader, the 3-ingredient recipe for cooking up profits. So this was my first book. And when I was ranked the #1 stock picker, I wrote it to show the strategies that I was using. So that's where you're going to get a lot of these shoot the moon strategies. The ABCs of Money is more a complete money makeover. This one is shoot the moon strategies. Put your money where your heart is. All right. So what is going on with, we'll come back to that, Reddit and Robinhood investors. So this is the one, Wall Street Bets, that on Reddit, where they were the ones that organized the short squeeze of GameStop, and they were promoting AMC. So let's take a quick look at AMC as well, because I had written a warning on AMC before they started making it popular on their bulletin boards, and that was December 14th. Look at the stock report card on these companies. AMC, Madison Square Garden Sports, so that's live sports, Live Nation, concerts, Cinemark, another cinema company. Their sales are down 90%, and they've been like that all year long. I don't know what they're doing for the 10%. I've seen that some cinemas are selling popcorn on the street in order to make a little bit of money. But you can see these are not healthy companies. They were actually not healthy before the pandemic. They were losing money. This is not a good investment. It's not something that you would invest in because it's a great thing to invest in. It does have the hallmarks of a pump and dump scheme, and I would be really careful with that Reddit bulletin board, because we just don't know the motives of the moderators. I can guarantee you that the SEC will be looking into their motives. But take a look at some of the topics that are being discussed. So this is a person saying how they've been following Reddit's picks, and as soon as they buy it, this is what happens to them. And this has happened to a few people, I'm sure. Why your meme stocks, now they're trying to blame it on the hedge funds, why all of the things that they promoted are losing so much money. And then there's another one that talks about, and I think this is really important, stop hopping on clear pump and dumps. Of course, on Reddit, you can use curse words. So I'm going to go past that, because I know we do have some teens and tweens that are going to be watching this. So I think the bottom line that I want to share with you guys, I do want to also share with you FANG versus the Dow. So a lot of this economic recovery has been fueled by technology, and you can see it in the numbers. The Dow Jones Industrial Average, a lot of these are companies that are founded a long time ago. They are very high debt. They might be at junk bond status like Ford, or at just above junk bond status, and have a boatload of debt, and they aren't properly funding their pensions, and there's just a lot of issues there. Their sales are probably way down. And we're going to take a look at some of those report cards so that you can see what I'm talking about. So here is Airlines. So if you take a quick look at the airlines, you can see that their sales are in the tanker, but their total debt and liabilities are also huge, especially compared to their market cap. So Alaska owes a lot more than its value. Delta does, Boeing does, American Airlines does. All of these companies, except for a very select few, owe a lot more than the value of their company. And there's other ones that are like this as well. Malls would be in that category. Believe it or not, even banks are having issues of losing revenue and being at or near junk bond status. So Goldman Sachs, BBB, Ally Financial, one rung above junk. Capital One, one rung above junk. Wells Fargo, one rung above junk, losing revenue, losing revenue, losing revenue. Very high debt to equity ratios. This compares with, let's take a look at FANG stocks. So Facebook, Apple, Alibaba, Google, Amazon, and I threw in Zoom just so you could see even Zoom compared to technology. So technology is very hot. This is the sales growth year over year. So they're selling a lot more this year than they were selling last year. And this stock report card was just put together last month. So it's fresh data. And Zoom is up 367% revenue year over year. Let's look at gaming. Here's another stock that was a shoot the moon stock that's doing very well, Turtle Beach. When I put this together last month, it was at 21. I think it's already at 35 now. We can pull that one up if you'd like to see it. But look at the sales growth. Gaming, very high sales growth for most of these except for Electronic Arts. But the headset device maker is the highest. All right. So we've talked about a lot of things that I wanted to share with you. And now I want to just show you real quickly the pie chart system. So let's say, for instance, that you had purchased Aphria and Tilray, and they have gone up 1,000%. When I looked yesterday and decided to take a lot of profits, they were up over 1,000%. If you have one hot slice that is now 10 hot slices, then that is telling you you don't want to have that much of your portfolio in cannabis. It's telling you sell high. Your nest egg gets bigger. It goes into cash for now. You trim it back to where it should be. If cannabis keeps shooting the moon, then that slice will keep getting bigger. Same thing if you wanted to do NEO for your clean energy. If all of a sudden NEO doubles or triples or quadruples and you have 4 hot slices instead of 1, again, it's not all and it's not nothing, but you can 1 to 3 times a year. Or if it's one company that you're putting in that hot slice, you're going to have to babysit it more than 1 to 3 times a year. Then, when you get the hot slices, it's saying sell high. When you get a slice that goes smaller, it's saying buy more low. And what's interesting about this is that I had a lot of people with cannabis, because if you look at the chart on cannabis, back to Aphria, prior to December, it was in this trading range of being about $4 a share. And in March, it went down to about $1.95. And so people were going crazy with it. And I said, I believe in this company. It's well run. The former Hanes Celestial CEO is the CEO. The former co-CEO of Whole Foods is on the board. I believe in this company. So the right answer is, if you had bought it at 4 and it went down to 2, is to buy more at 2, right? And fill up the slice. The right answer is, if it goes from 2 to 40, is to sell high. And again, you're going to trim it back to a slice. When I trimmed it back yesterday, I think I had $98 in the investment, and it was still valued at over $1,000. So, you can use the pie chart system so that you don't have to do as much babysitting, if that means something to you. All right, so before I open up the lines and we can have a little bit of talk back and forth, I wanted to show you a couple of other things that I think are important for you to consider. So first off, I am hosting an investor educational retreat, February 26th through the 28th. That's Friday through Sunday. And if you register by tomorrow, you get the best price. So it's important, if you want to do this, to look at this today and tomorrow and call our offices or email info@nataliepace.com or call 310-430-2397 to get your questions answered and to register by tomorrow. So again, here's where you'll find the pricing information. And you can see here that the early bird pricing expires tomorrow. You can also see that if you want to put together a group or you want to bring a family member, that their price is going to be much lower. So this is, look, the average price, regular price of an in-person retreat can be as high as $1,650. So this is a great price. It is a good idea to consider. It's online, and I think that it's actually a very pleasurable, maybe even better than in person, because nobody's at the back of the room. You're here with me. We record the curriculum so you can watch it back. So it is a good experience. Also, and again, this is only for volunteers who've been to at least 2 retreats or experienced traders. I am doing a stock masterclass March 6th. That's where you're going to learn the advanced techniques that we talked about. Where can you find the forward outlook? Where can you find the earnings call information? How can you easily search through the earnings call information for the information that is going to be the most helpful to you in looking at your crystal ball? And then the day after, we will do the options for beginners class. Now, don't let that name fool you. If you know how to pick the biggest winner and the biggest loser, which you're going to learn at the Stock Master class, that is putting you in a higher league than most people who are trying to trade options. So what I'm going to teach you in the options class is just the reason I call it options for beginners is so that you learn basic things about strike prices and, how long you want the option to be open and how you can determine what price you should be paying and that sort of thing. And then if you want more about me, just go to nataliepace.com and you can see in the drop down menu, just click on About Natalie Pace and you can see my story. So I don't tell all of it here, but you can see a lot of it here. All right. So I've been doing this now in financial literacy, financial education since 1999. And the systems have really proven themselves over and over and over again. They are time proven. So I would love to see you at the retreat, the master classes, and I'm very grateful to have you in our community. If you are thinking of a company that you think is super hot, email us. We'd love to look at it. info@nataliepace.com or call 310-430-2397. It's easier for us if you email us because then we have the paper trail and we can kind of go back to it and look at it, that sort of thing. All right, I'm going to unmute you. I'm going to also pause the recording so that you're not recorded. And we can have a little bit of a conversation. It'll be short because I kind of went on a little bit long. Pika.